Quite a few people have reached out to me and just said, Ken, what the heck is going on inside the markets? The best way that I can explain it is the VIX. The CBOE, volatility gauge, or the VIX, is the volatility of the S&P 500. Generally, when we see this spike, we see the major indices falling. And if the major US indices fall, that typically creates a fall across the globe. I'll just show you, this is on the 3-month basis, I'll just show you across the past 5 days what the VIX has been doing. We can see that across the past 5 days, the VIX has been going up. When the VIX goes up, it is quite probable that other global indices will go down. You can see here the VIX going up and the DAX going down. What about the FTSE? It's done a similar thing. It's inverting that move. What about the Nikkei 225? We saw that the VIX spiked up very significantly in the past day. And what is that doing to Japan's index? You can see just here it's been coming down. What about Shanghai? China typically inverts moves in the VIX as well as Russia, so just something to keep in mind. The S&P 500 coming down as the VIX goes up. The Nasdaq coming down, Dow Jones Industrial, it did a bit of a rally because there was a rotation into small caps, and then it just followed the VIX's gravitational pull downwards. The main markets came down. Semiconductors were specifically hit. And we can also see that the auto manufacturers such as Tesla was hit as well. In the past trading session, we saw global outages due to the Windows Crowdstrike outage. And it affected just about everything except for crypto. Why was that? Because crypto is not built on a Windows operating system. It's built on Linux and other Unix derivatives. One of the interesting things about the Microsoft Windows blackout, it affected so many things, but the banking sector has been one of the hardest hit. Cash became king, but also crypto became king. The banks have been pushing for a purely digital currency, but with banking networks going out all across the world, that's thrown that plan into jeopardy. We've seen from time to time, when the main markets go down, crypto is viewed as a source of safe haven. This especially occurred with the banking crisis. Remember when all those banks went belly up? As soon as the markets depart from each other, that is the main markets and the crypto market, we hear, especially when Bitcoin goes really positive, it's going to the moon. And also, it snapped its correlation with the S&P 500 and other major indices. This is just not simply true. Over time, you'll find that the markets, Bitcoin cannot escape the stock market's gravity. In this chart, this is Bitcoin, the candlestick pattern, and the blue line is the SPX, or the S&P 500. You can see that the SPX and crypto tend to move in the same direction from a longer-term perspective. But also, you can see from time to time, they not only move together, but they diverge as well. Crypto is a really small industry. So when you have particular problems inside crypto, it can be crypto-specific news that causes this divergence. From a layman's perspective, if things are not moving exactly up and down, people think that there's just no association. This is not the case. From a statistical basis, Bitcoin cannot escape the stock market's gravity. But what does that actually mean? The best way to look at this is to go back to the COVID sell-off. Now, I'm just going to zoom in here and just help you to see something which you can't unsee once you've seen it. When we get big sell downs in Bitcoin and crypto, what we actually find is that the main markets all come into alignment with each other, as does the crypto market. The markets are full of lag-based indicators, so if you're looking for something to give you a precise 100% indication of what is happening, you're just going to be really, really frustrated because it doesn't work that way. Now, Ken, what is this red line? That is the VIX. I'm going to invert the VIX so that you can see something. This looks pretty interesting. So this red line is inverted. So when you look at an inverted chart and it's going down like this, it's actually the normal chart is going up like this. Now, why do we invert charts? We invert the VIX because it's the fear gauge. And when fear goes crazy, we expect negative price momentum. And that's exactly what we got leading up into the C19 sell-off. That took quite a few months to happen because C19 broke out in January. It started late November, early December, and took months and months and months to hit global markets. This means that any person that ignores the VIX does so at their portfolio's peril. Always remember that there are lags inside the market. If we continue to see the VIX spiking up, we must take care and possibly corrective action. So just bear in mind that if the VIX starts to really spike up, it could bring everything under negative price momentum. But that will just be a phenomenal buying opportunity. Just have a look at this one in particular. You can see the blue line is the SPX, that's the S&P 500. The VIX is this red line. And what is the candlestick? You got it. It's Bitcoin. So when Bitcoin was down about $4,000, that was the ideal time to buy. People would say, I wish I bought it there. No, you don't. You would have been saying, no, I need to get out of the market. I need to sell everything. And that's what typically this capitulation type action tends to bring with it. It's very difficult to go in on the red. As a community, we specialize in doing that, but it's not easy to do. And the reason that it's not easy, for one, people hate losing money on paper or anywhere else. And two, you never quite know where the bottom is. And three, the institutions always say you need to sell high and buy low. Yeah, you got it. So they're already setting us all up to think about things in the wrong direction. Instead, we need a mindset. If the VIX is spiking up, well, this is a really good thing. We're going to get bargains. Can we pin the exact bottom? No, we can't, and we don't need to. We just need to look at structure to understand where the greatest probability of turnarounds exists. Let's fast forward into the current price action. What is the inverted VIX doing? Well, it's pointing to negative price action. What happened last time? Well, it pointed to negative price action and Bitcoin came up. But then more and more negativity in terms of the VIX caused the markets to come down. So we need to be aware of these things. Don't just write it off and say, oh, it moved in the opposite direction. Crypto is decorrelating from the main markets. Please don't do that. What you want to just do is to look at your heavier structural levels below price and get ready for red. But what happens if it doesn't go red? If you just look back at the history of volatility, as soon as the VIX starts to spike up, it means that people inside the main markets are losing money hand over fist. And when they're losing money, even a 10% or 20% reduction in price, for example, in the S&P 500, they say, stock market traders and investors say, oh no, we're in a bear market. It's gone down 20%. 20% reductions in crypto is every other week. Or you could call it Wednesday. That means we need to be really on the ball when it comes to looking at structure. You can absolutely, understandably, just ignore these kind of signals. But over the longer term, they tend to play out, and you want to take advantage of them. You don't want to get freaked out by this. You want to prepare for it. But what happens if the crypto market just keeps on going up? Like what happened in the banking crisis? Absolutely. We have three dimensions of thinking: a down strategy, a neutral strategy, and an up strategy. And all of them play out at the same time. But I don't want that. I just want one strategy. Is it going up? Is it going down? Or will it flatline? Hey, if I was here to BS you, I would just say, oh, in absolute certainty it's going up because it just went up and it's just got to continue up. That realistically, what it all depends on is structure. We must look into the market to see where the structural levels tell us the price is reacting to. So let's do that. It's really difficult for people to think three-dimensionally because we're just not taught how to do it. We say either something is going up or something is going down. Either the light is on or the light is off, and that's all there is to it. This is called binary logic. Unfortunately, inside financial markets, everything is moving in a wave-based function. It's both going up and down, pretty much simultaneously when it comes to the crypto market. So a person can say it's going up when in fact the price goes down, but longer term they are correct. But we know one thing, when it comes to structure, structure is everything. I've just zoomed out and drawn some SCs in for you. An SC is called a Stanfield zone. It's a cluster of SLs, or structural levels. What we can see around just a little bit above, that 61,100, there is a level of structural support. And around that 58,000, there's also a level of structural support. We've actually gotten over an area of structural resistance around the 65,000. There is a light area of structural resistance around 70,000, and then it gets more dense and heavier around 74, and above 78 it goes thermonuclear. In other words, there will be a ton of sellers up there. This is on a daily basis, so what we would expect and anticipate, if this 65,800 actually holds, we would expect a backside retest and therefore movement upwards. If we're getting bullish momentum, if we start to fail and retest at 65,000 and come down, it means that the bears are gaining traction. I've just changed this to the 1 hour basis so you can see when we get above structural resistance and confirm it, we're heading to the next structural resistance where we expect to slow down. If we get above it, we're heading up to the next structural resistance. Price is always moving in a wave. So if we come down and get positive fresh air gaps, this means that the buyers are supporting price, especially if they're higher. This is a really good sign. And we did get a cut over, and the VIX, even though it spiked up, it didn't make much difference because we had a news-specific event. Crowdstrike and former President Donald Trump is backing Bitcoin and crypto. And Crowdstrike is backing Bitcoin and crypto because when we see that the Windows operating systems go out, the banks stopped. That's good for crypto. Now, if we get a retest into this area of structural support and reconfirm it, heading up to the 69,700 mark is absolutely on the cards. But if we fail and just get below, so come down to around 65,000, underside retest, and head back down, that opens up a bearish case. You just literally need to look at what price is actually doing. It takes a long time to learn that the only real certainty inside financial markets is moving from structural level to structural level. And we saw in the past trading session that we had this big push through all of these sellers. So significant shorts were liquidated here. And we still have to confirm that as support. If we do so, positive price momentum. If we fail to do so, negative price momentum. It is really that simple. Just keep your eyes on structure. Bitcoin and crypto has done a pretty epic rally up. We've seen it move through structural resistance, through structural resistance, through structural resistance, and it's not really confirming that 67,500 structural resistance level. You can see these wicks. When you get tail wicks up, this means rejection. When you get a rejection and you don't get a follow through, it means the price is starting to lose power. If we start to come back to around that 66,100 level, that's not too bad. That would be a really good confirmation. But keep your eyes around that $66,000 mark. If we start to go below that, that's a bearish sign. So we don't want to do that too much. We want price to come down so it can just consolidate these gains and then move upwards. We must understand that we're in a positive cycle. We are in the bull market, as I said in yesterday's video. A lot of people just get called in on the green only for price to move against them, and then they typically sell. So it's very easy for people to buy up here and to sell around here, or even if it goes down lower, to sell down there. Instead, just by understanding that crypto is very volatile, we always have wicks all over the place. And if we can take advantage of from an investing stance, of these long tail rejections down, and also the structural levels, knowing the price is always moving in a wave. If you were up here, you wouldn't have even anticipated that we would be here now. And if we end up going lower and don't confirm structural support around these structural levels, that is just a consolidation of price. This is all fantastic, and we've got to keep positive vibes because we are in the bull market. Weekends can be pretty volatile, especially under such conditions. A lot of people will look at the main markets and see their portfolios, especially Nvidia stock, because Nvidia has been really, really hot. And the reduction in Nvidia, the reduction in Microsoft, and the reduction in Tesla, all of those high growth stocks, will have people thinking, oh, is the top in? Maybe I better take some profit. Oh, maybe I'll get some money out of crypto and put it in the stock market. You never know what goes through people's minds, but you do know this. When prices go red, it is cause for the vast majority of people to get really scared and sell. And when prices go green, it's exactly the opposite. People get FOMO, fear of missing out, so they just buy at any price. As a global family, we're very different to that. We know that the green just draws in retail and the red just liquidates retail. So we just say we want to get onto the right side of the percentage and think with more of an institution of one mindset. The crypto market is exponential by nature. It has exponential explosions followed by exponential implosions in price. Miner profitability post-halving is a really key issue. A lot of miners become unprofitable simply because block rewards halve, and it's significantly harder and more expensive to mine Bitcoin. We're seeing miner profitability, it's quite in the red, but it's starting to kick up. We may have had miner capitulation down at the bottom here. If that is the case, less miner pressure means more profitability for the miners that survived. There were so many phenomenal comments in yesterday's video about things that you want to know about this particular chart and the different variances from sunlight to sunlight, darkness to darkness, consolidation to consolidation. I look forward in following those up. I thought it was just more important to cover off Crowdstrike and what was happening with this inversion of the VIX and crypto. And please let me know in the comments, are there any specific topics that you would like to see more of? I want to make this content as relevant to you as possible, but I can't do it if you don't let me know what you would like to see. Right now, crypto is undeniably king. It's shown the banking system for what it is. The banks want to destroy cash, but they can't even get their own IT systems working. And their particular glitch made crypto incredibly happy. And don't forget, as the banks went down, we saw a lot of upward price momentum in the crypto space. Please let me know in the comments, what do you think crypto is going to go next or going to do next? Do you think it's going to romp up? Do you think it's going to be bullish? Do you think it will consolidate, or do you think it will be bearish? I look forward to your comments.